Hello, troopers. Thanks for joining us today. We are about to start LeapMeet 1, Options Basic. Just let's wait for 2-3 minutes so that we can welcome everyone else. I'll just unmute everyone so that if you want to say hi to hello everyone, all your trooper member, you can say hello.
Hey guys, how are you guys doing?
Hey Pratik, thanks for joining us.
Hello, how are you doing?
All good. Thanks, Mukund.
Hey guys, what's up?
Thanks, sir. How are you doing?
Hey guys, everyone, how are you?
Thank you,
Good.
Jamie.
How are you doing?
Thanks for joining, Sunil.
Hey, who's hosting who's talking for the host? Is it Y?
I think YP, yeah.
All right. Nice to meet you, man.
Yeah, nice to meet you guys. Welcome.
Same here.
Hi everyone.
Hello, Rajat.
Hold up, I'm gonna join from. Yeah, you guys can't hear me, right?
Yes, we can hear.
Okay.
Yeah, we can hear.
Yeah, perfect.
So we have 32 members right now.
All right. Think we should get started.
Just give it 1 more minute.
Okay.
Hello, Sunil. Okay, so it's 2:05. We are starting with the 32 members right now. I'm going to unmute everyone. Before that, I would just like to tell you.
Hi, Yash here.
Yeah, Yash is here.
Hi, Yash. Fahad here.
Hi, Fahad. Hi, everyone.
Good. How are you doing?
Good.
Thank you for arranging this session.
Yeah, no problem. Of course. Let's get started.
Sure.
Okay. So if anyone has any question, you can ask after each slide. And we have also arranged a special Q&A session once this presentation is done. Okay. So I'm going to unmute everyone. Okay, so Admin White, can you proceed?
All right. I want to welcome all of you. Thank you for joining. My name is Yash, and you guys know me as Admin Y. So first of all, I want to discuss the agenda of this meeting and this presentation. Some of you trade options with me and on your own all the time. Some of you are familiar with the concept of options as well. So this meeting, but a lot of you guys reach out to me and basically ask like, what are the options? Like, what's the purpose of trading options? Why is it better than trading regular stocks? What do they like? The basic concept of option is not that common. Like people are not familiar with it still. So I wanted to arrange this so we can go over like complete basic. So everybody has understanding of what the options is. Another thing is like when I post something in our chat room, like, okay, I bought this, like some people understand it, but a lot of people, they don't understand it. They are like, it's completely like a foreign language to me. So I'm going to try and go over the alerts towards the end as well. So when I post something, you know what I'm talking about, basically. And so let's just get started. Can you guys see my screen? All right, so let's get started with what is the option? What is the option and option trading? So to understand that, I'm going to use this analogy of a pizza and a coupon that you guys use to buy pizza. Let's say you have a coupon that says you can get a pizza from Pizza Hut for $10 each, and expiration date on that coupon is January 1st, and coupon cost is 25 cents. And current price at the Pizza Hut for each pizza is $15. So basically, if you take this coupon, go to the Pizza Hut, you get $15 pizza for $10, correct? So now you don't have $15 for to buy the pizza, but you are holding this coupon. Now I come in and I say like, okay, I want to buy a $15 pizza for $10. I will give you $2 for your coupon. So give me your coupon. So basically for me as a coupon holder, I make $2 off of that coupon. I was not going to buy pizza anyways, but I still make $2 profit. As a person who was going to buy pizza, now I get the pizza for the $15 pizza for 10 plus the $2 that you gave me. So the $12. So it's a win-win for both of them. So that's now that that's established, let's just say the current price for the pizza, something happens and current price of the pizza goes from $15 to $20. Now I go back, like someone comes back to me. Now I don't have money to buy $20 pizza, but person C comes to me and be like, hey, I heard that you have that coupon to buy the pizza, $20 pizza for $10. Give me that coupon and I will give you $2. And you're like, no, I paid for $2, but now the value of that coupon is more because the price of the pizza is more. So I'll be like, no, I bought this coupon for $2, give me $4 and it's yours. So now I made $2 on that coupon myself, and the person who got the coupon can now buy that $20 pizza for $10 plus the $4 that he gave me, so $14. Now, so that's the coupon. Now, if you put this thing in options perspective, it works the same way. Options are like, to put this in this analogy, options are like coupon. It gives you right to buy shares of a certain company at a certain price. So that's why I'm going over this analogy, so you can understand the underlying concept of what's going on. So now this expiration date comes in picture because it expired on 1st of January. Now, if I go to someone and sell the pizza, try to sell the coupon like on 31st December and be like, give me $4, they're gonna be like, no, it's not worth $4 because it expired tomorrow. I will give you 25 cents. So I bought it for $2, but the value of that coupon went down because the expiration date is closer. So it's all related like that. So I keep this analogy in mind as we move forward. Anybody have any questions so far?
You can drop in the chat. You can drop in the chat so that I can unmute.
Okay, how about we will start So Tony Stark asked, how did the first person get the coupon in the first place? In the options terms, it's like the whole option chains that market makers make.
Here you go, Blossom.
So it depends on, it gets generated, like the new expiration date comes and the options are generated by the market makers. So there is no origin point. And as an option trader, you don't need to know about that either. You just need to, I will go over what the option change is, and it will be explained towards the end of that. But how the options are generated is generated by market makers.
Okay.
Expiration dates are usually weekly. So every Friday your coupons expired. Every Friday your options expires. And it's up to you to decide which expiration date, coupon, or options you want to buy. But it's weekly, so every Friday or your options will be expired. The lotto that we call are when you buy the same week expiration date. So it's every week. There are no gaps. I actually take that back. There are gaps when it's the liquidity is super low and no one is buying any options, no one has any interest in that stock. That's when they do like 2 or 3 week or monthly expiration date. But the stock that we usually trade and see, Apple, Google, whatever, those are like weekly. It's every week. I think they generate about 2 or 3 years of expiration date in advance. I'm not really sure on that one. I'll have to look into it, but it's weekly. That one, Amit, your question, we will go over it as we move forward with the presentation.
Sure.
Remember, guys, this presentation is for very basic understanding of options. So let's move ahead, and then you can keep asking the questions. So now we're gonna take that knowledge of coupon and pizza and that analogy, and we're gonna move forward with the option and option trading. So like I said, let's just say a company's stock price is $50 right now. Option premium means option price. So you can buy an option with strike is $50. Strike price meaning that's your target price. So if stock is at $45, you can buy a strike price 50, or you can buy any strike price you want, but the option premium is basically the price that you pay to buy the option that allows you to buy that particular stock at $50 price. So let's just say you bought this one option for $1, and the strike price is $50, and stock is trading at 40. Current stock price is $50 as well. Now, the next day, stock goes up to $55. What happens then is that your option premium price, the price you paid, or the value of your option increases with the strike price as well, or it decreases with the strike price. So if the strike price, or if the option price, sorry, not the strike price, if the option price goes from $50 to $55, your option premium will go from 1 to say 1.5. Or if your underlying stock price go from $50 to $45, your option premium price you paid the right to buy that options will go from 1 to say 70 cents. So it's all related to that. And what I want to emphasize here is that we as an option traders are not interested in buying stocks when it expires. So when an option expires, you have a right to exercise that option, meaning that, let's just say I bought this option to buy stock A for strike price 50. When the option expires, I have right to buy that stock, even if it's at $55 or $65 or even $100. I can still buy 100 shares of that particular stock at $50. as an option trader, you don't do it because first, we don't have most option traders are not worried about it. And when we trade like options or stock options for like company like Amazon that are like $3,000 stocks, you're not gonna buy 100 of those because most people simply don't have that kind of capital. So we are trading options. We are not trading the underlying security. That's the main thing here. So in pizza analogy, like you're not actually gonna buy the pizza, you are just buying and selling coupons. So if the pizza price go from 10 to 15, you're selling the coupon you're holding for more money. If the pizza price is going from 10 to 5, now the coupon value decreases because nobody's going to want to buy a coupon that allows you to buy $5 pizza for $10 because it's worthless. It doesn't make any sense. So in terms of option, it works the same way. If you're holding an option with strike price of 50 and option price currently is at $40, nobody gonna want to buy that option, because why would you want an option to buy a stock for $50 when its actual value currently is at $40? But that's when the expiration date comes in. So as an option trader, I will be like, okay, you know what? It's at $40 right now that the value of that option is low. So give me that. You bought it for $1. Why don't you give me for 50 cents? Because I personally think that stock, no matter, like, even if stock is trading at $40 right now, by the expiration date, it's gonna go up and the value of this coupon is gonna increase. So I'm gonna buy it at 40 cents right now, and then I'm gonna wait until the stock goes back up to 50 or 55, and value of my option goes from 40 cents to $1. So that's the anticipation. That's predicting the move, or that's when you invest in an option, when you think that the stock will go one way or the other, up or down, it doesn't matter. But you buy it in the anticipation of the move of the stock. So again, I want to emphasize on the fact that we are option traders. So we don't a lot when you look online and stuff like that, that this isn't why do you buy, why people, big institution buys options because they have money to buy the underlying security. Like a lot of people would buy $3,000 strike price options for Amazon because they can, when the stock is at 3,500, it gives them right to buy Amazon stock for $3,000. So they save 500 per stocks. So big institutions buy it, big hedge funds buy it. As an option trader, we don't. All right, let's move to the next slide.
We have some question here, Yash.
Yeah.
So,
all right.
there's a Twitch, Sadaga, Pratik Patel. We have some questions.
All right.
Okay, I'm gonna unmute them. Here you go, Pratik.
Okay, so Pratik's question is it worth to buy strike price option that's below the stock price? When you do that, you're buying in the money options. That's what it's called, when the strike price of your option is lower than the actual strike price. It is worth it. People don't do it because when the option is in the money, it's very expensive. And when it goes against you, when let's just say that $50 strike, $48 strike price option that you bought, and the stock price goes from 50 to 48 or 49, you're gonna lose a lot of value for that option. So the option traders usually anticipate the moves. They think that it's gonna go this way or this way. They don't buy in the money options right off the bat. A lot of people do, but it's still just as risky and it requires usually higher investment than you would if you're buying a stock option that's $52 strike price rather than 48 or 46. The premium is, yes, it is per unit stock. It is for 100 stocks. So, and one option contract gives you right to buy or sell 100 shares of that particular stock. All right.
Okay, so the next question is from Twitch. Here you go, Twitch.
One more question, and then we'll move ahead with the
Sure.
presentation.
Yeah.
All right, Twitch is good. Okay, let's move ahead with the presentation then. So what are the pros and cons of option trading? Why do people decide to trade? Why did I decide, or why did a lot of people decide to buy and trade options rather than stock itself? So there are some pros and cons. It's not 100% better than trading underlying security, but there are some pros and cons, and so let's discuss that. So let's discuss pros first. So what are some of the good things about trading options? One of the main thing about trading, the good thing about trading option is that it's cost efficient. For example, Amazon stock is trading at $3,000. So if you want to trade Amazon, you at least have to have just one stock. You at least have to have $3,000. Whereas the option for Amazon usually go from say $30 to $40 or even $50 per contract. So that's $500 investment, or $700. So you can buy and sell options way less than you would invest for stocks. That's one of the examples. So it's very cost efficient. Like if I can give you an example, in the room last Friday, I bought a stock option for the option for the crowd for 60 cents. So that's like $60 to buy an option. The actual price of the stock at that time was about 160. So it's like fraction of the, you will need way less capital to trade options than you would for stocks. So that's one of the main benefit. Higher return potential. Again, example, last Friday, we traded crowd, and I personally made 400% return on my investment. And if I were to held it longer, I would have made 1,000%. That kind of return is unheard of when you trade stocks. In stocks, 10% return on your investment is considered great. So Amazon example or crowd example, 10% of, like, let's just say I have 100 stocks of crowd at $160, and 10% of this, that $16. So it's the return potential is way less when you're trading stocks than when you're option making 400, 500, 100% return, even 1,000% return is not unheard of when you are trading options, and with much lower investment. So you won't require thousands of dollars to earn 100, like make money. So those two are one of the biggest, like those two are the biggest advantage of trading options, because it gives you ability to make money with very little investment. So, and the third one is cap losses while betting against the stock. I'm not sure if you guys are familiar with shorting the stock, but it's basically you're betting against the stock. So let's, for example, again, I will use Amazon. It's, for example, it's at 3,000 right now, and you think that it's overvalued. This stock's, the value of that stock should be like around 2,000. So you sell Amazon stock before you buy it. So you sell it at $3,000. You borrow it from your broker. You sell it for $3,000, and then you wait. And then when it goes to 2,800, you buy it back, and the difference of $200, you keep it. That's shorting your stocks. What happens when it goes against you? What happens when that $3,000 Amazon stock goes to $4,000? You're gonna lose $1,000 because at some point you will have to buy that stock back to return it to your broker. So you will have you sold it at 3,000, but you will have to buy it back at 4,000 or 5,000 or 6,000. We don't know how it's going to go. So the amount of money you lose while shorting a stock is infinite. But when you're buying puts, which is basically betting against a stock, the most amount of money you're gonna lose is your option premium. So if you buy a put that says that this stock, which is trading at $50 right now, and it's gonna go to 45, I bought that put for $2 premium. I'm gonna lose $200, and that's the max amount of money I'm gonna lose, even if that stock goes from 50 to 5,000. It doesn't matter. I'm just gonna lose 200. So your losses are capped. And not just buying the put, but when you buy any option, basically, when you enter a trade, you know exactly how much money you're gonna lose. So if you buy an option that's for $500, at most you're gonna lose $500, and that's it. And that way you can employ a strategy where you only buy options that are like 2 or 3% of your total portfolio. Then that's how much you're gonna lose at any given point. Like if it goes against you, that's all you're gonna lose. So that's one of the really good things. And another thing is that you're not gonna be stuck in the trade. I see this a lot of time while trading stocks, that someone bought it. A stock ran like 40-50%, and someone bought that stock, and now it went against you. Now from $40, it's trading at $11, and you're stuck in the trade. People say that it's not a loss until you say it and until you sell it, but it is a loss because your capital is tied. That $4,000 that you spend to buy the 100 stocks, that money is tied now. You cannot use it for anything. So that's a loss. That's a loss of opportunity. That it's an opportunity cost. You could have taken $500 loss, you put it somewhere else and made that 500 plus more in shorter time frame. But so that's so my point is that the losses are capped when you're trading options. When you enter a trade, you know exactly how much you're gonna lose, and that's a good thing, because that way you can plan your trades ahead of time. You know, okay, my account is $5,000, and at any given point, I'm only gonna bet in one trade $500. So at most, you're gonna lose $500, and that's it. So that's a good thing. And another thing is that I personally don't get creative while trading options, but there are tons and tons of different strategies and different way to put orders like available. Like there's iron condor, there's butterflies, options, spreads, vertical spreads, all different kind of strategies. You can learn and you can deploy it and you can use it for your benefit, and you can get, it's not as simple as buying low and buying low and selling high, like how it is in stock. It's very, you can get very creative. A lot of people I know are very creative. They have this very complex but profitable strategies, and very safe as well. So you can get creative. So that's another benefit of trading options. Like you have multiple different strategies available. I personally don't trade it because I like to keep things simple, as most of you know now. I don't like to keep things complicated. The simpler is better for me. But if you like getting creative, you will have a field day with trading options. All right, so let's move on to what's bad about trading options. I told you all these great things about trading option where you can make 1,000% return on your investment. There has to be some catches, right? So there are some catches. There are some bad things about options, or the cons, as we say it. one of the main one is it's complicated than trading stocks. Stocks, you buy low, sell high, simple. Everybody knows it. You have the price, but when you come into the option world, there is implied volatility. There is this Greek symbols. There are it's a time sensitive thing. It's strike price, premium price, all these different things that you hear everywhere. It's part of the whole game of trading options. It's more complicated than simply trading stocks. And that's why I think there is more return to it, because not everybody can trade options, but everybody can trade stocks. Also, there's less liquidity. So when you look at the liquidity in the stock market, you see millions and millions of trading stocks trading every day. But when you look at the liquidity for the options, usually they're like, if the company is big and highly tradable, like Apple, you will see 500 or 1,000 open interest and trades happening. When you see company that is not as active, like Crowd, you will see 50 to 100 open interest for the options. So it's a less liquidity, but we don't have to worry about that as much, because usually we are not buying hundreds of contracts anyways. We are buying at most 5 or 10. I buy 25 to 50 contracts at most. So we don't have to really worry about the liquidity, but it is a thing to consider when you decide to trade options. Also, it's very time sensitive. So like I said, every options that you buy comes with the expiration date. So if you don't sell it expiration date, and if the stock doesn't reach the strike price that you have on that options, your option is going to expire worthless, and you're going to lose 100% of your investment. So it is time sensitive. So if you buy a stock and your strike price is trading at $50 right now, by your expiration date, that stock is gonna expire worthless. So that's another thing to keep in mind, because versus stocks, like I said, people buy stocks at $40 and then it's a $10 years until it returns back to their original price, and then they sell it for no profit. But that's the thing, it's not time sensitive. You can keep it and hold it all your life and you will be fine. It's not gonna go, like, you're not gonna lose all of your investment unless the company gets delisted or it goes away. So that's another thing about it. And also, it's good to mention that if you don't have a strategy in place, it's very easy to lose money trading options. Why I keep things simple is because of this particular reason. That's my strategy. If you don't know when to buy option, when to sell it, if you are one of the people who hold it and hope for it to go up or hope for it to go down, if you don't have a strong strategy in place, it's very easy to lose all of your investment all the time. And so it's always good to have strategy in place if you decide to trade option, because if you don't, then you're going to be in trouble, basically. And also using leverage. This is the last point, but it's one of the very important point. Using leverage to trade option, especially selling naked option, can be very, very risky. What's an option? It's basically shorting calls dollar could explode to like $50. So now you sold it for $1, but now you will have to buy it back for $50 and you're going to lose $49. So it's very risky. It's the same thing, the higher return potential, that concept applies here when selling naked options. The losses are not capped. When you're selling option, your loss potential is unlimited. So I have read about and seen people lose hundreds of thousands of dollars when selling naked options. It's very risky. I personally don't do that because I don't like losing money. So it's very risky selling naked options. Buying is what makes it good. So again, let me recap this particular concept. So when you're buying an option, the most amount of money you can lose is the value of that option, and most amount of money you can make is unlimited. When you're selling, it's the value of that coupon, but most amount of money you can lose is unlimited. So it's the other way around. So, and if you're losing leverage, then it's gonna get even more, because now you will owe your broker or your banks all that money that you didn't have to begin with. So that's why it's very, very risky. And that's why I strongly advise anyone that I know against trading, against selling. So that's one of the, I just wanted to discuss that one because it's very important. All right, let's move on to the next one. And I'll take 2 or 3 questions in the meantime. Anybody has any questions?
So we have.
So just to reiterate, Yash, what you said. Sorry,
Yeah.
somebody else is going.
Blossom, you can go. Yeah.
Essentially, if you buy a call or put option, the way it's been defined in whatever trading app you use, that's basically the downside of that is essentially what you bought the option for. But if you do anything other than that, like I'm still not clear on what a naked option is, but I think I'm understanding is you're betting against the market, which is not just a straight call or put option. Those have unlimited downside, but
Correct.
a standard call and a put is really just the contract's value that the premium that you paid. That is the amount of money you're, going to lose, if anything.
That's correct. Yes.
Even if you don't touch it, even if it expires or whatever have you.
That's correct. Yes. And let me quickly go over what the naked option buying and selling is. It basically means that you don't own the underlying security. There's another concept of buying or selling options for the securities that you own already. So if you own 1,000 or $100 stocks of 100 shares of Amazon, and you are buying calls using that stocks or that the underlying security you own as a leverage, then it's called covered call, because your calls, you own the underlying security, so you already have 100 shares to sell. If someone buys,
that's like saying you have the pizza
yes,
in your fridge and you can sell it or whatever, versus we're just selling coupons.
Correct. So you have the pizza, and then you're selling the coupons to someone who wants to buy the pizza. And let's just say it goes against you, you still have the pizza to give it to people. But if you don't have the pizza, then it basically means that it's a naked buying and selling options. So that's I just wanted it's a little bit advanced concept, and I don't want to cover it in like this basic webinar, but I want to just quickly clarify that one.
Okay, thanks, Blossom. Is there anyone who has
Anybody
a
have
question?
any other questions?
Go ahead.
Hello.
Hello. Hello. Hadi, can you unmute?
Yeah, who is that? Okay,
Awesome.
close them. Yeah, unmuted.
Okay. Hey, it's Mimi. So I guess I have two questions. I don't know. So first one is, how long do you study like the particular stock to feel like, for you personally, to feel confident to trade it? And the second one is, it's kind of like for beginners, like what do you use? Like, do you use E-Trade? Like what
Yes.
broker do you?
So to answer your first questions, once you're familiar, like I usually tell people that you trade stocks for like 3 to 5 months to 6 months, develop your own strategy that's profitable for trading stocks, and then you move to the option trading because you already have that strategy in place. I personally trade stocks that I have been studying for years now. If you guys follow my trades, it's usually the companies like the mega caps and mid caps companies. I don't trade new companies, or I don't trade companies I'm not familiar with, because like CrowdStrike, Roku, all those companies I've been studying for years now. I know how they move. I know how they will react to certain news and stuff like that. So to answer that question, it's actually up to you. And it's for you to decide what strategy will work for you. There is no right or wrong answer. There is no 100% answer where I can say, oh, you have to study for a year or two before you do it. It's totally up to you. I have seen people getting familiar with stocks like in a week, because they just like going through the charts and see how it works and what's going on. And to answer your second question, how do I use? I have 3 brokers. I have E-Trade. I have Thinkorswim from TD Ameritrade, and I also use Robinhood. So that all of those are platforms I use to buy and sell options. At the end of this webinar, I'll show you how I use E-Trade to buy and sell options, and that will show you like, okay, this is how you place an order for option, because it's very basic and things people still are not familiar with.
Thanks.
Hey, I have a question. So I already put in the chat too. So when you buy options, a call or put, and then you have to sell it, is the order important? As in, like, you buy a call option first and then sell it, or the opposite? Which one is better? Is there a different pro and con between those two orders?
Yes. So you buy and then you sell. That's like when we were discussing pros and cons. That's what I mentioned. You buy and then you sell. So when you do that, the most amount of money you can lose is what you bought that option for. If you sell the option, you don't have it, and decide to buy it later, the loss can be exponential, and I strongly advise against doing that.
But then if you sell an option, do you have to buy it back? Always?
Correct.
Okay.
Yes. You have to buy it back.
So yeah, so because when you buy an option, and if you don't sell it, it kind of expires, right, with a zero value. Does it not that happen the same with you sell an option first?
No, because the option that you decided to sell, you borrowed it from someone else. So whoever your basically your broker. So when it expires, your broker will ask you either to pay up whatever the price it expired at, or will ask you to buy the stocks for that, whatever the current price that's going on.
Oh, okay, makes sense.
Yeah, so that's why, because you don't have it, you don't own it, you didn't pay for it, you just sold it. So when it expires, you will have to buy back for whatever price it expired at. So let's just say you sold it for $1, and when it went up to like $40 on the expiration date, then you will have to buy it back for $40 when it expires.
Oh. So would you agree if buying first is always like a more defensive or to limit loss strategy?
That's the strategy I use. That's the strategy that's the safest strategy, as you can tell. Like I said, like that, you will know when you enter the trade you how much money you can lose
Oh,
at most. The other one, you don't know. A lot of people use that because they're bears. Basically, they are betting against the stocks, and they know that when the stock is going to go down and stuff like that. They have studied that, and they are familiar with that concept, and they're willing to take that risk. Or you can do the same thing with like trading with stop losses. Let's just say you sold a stock for $1, and the option for that. The premium for that option went to $2, then you decide, okay, I'm just going to stop out here. I'm going to buy for $2, take $1 loss, and call it a day. So you can still do that, but it's risky because one, options you can't trade after hours. So let's just say you sold an option for $1 with strike price of 50. Overnight, that company got really good news, came out with a vaccine or something, and the next day, that $10 stock, the stock that was trading at $10 went to $100. You can't do anything pre-market. So when the market opens, the options value that you sold it for $1 is already at $50, and you can't do anything about it.
and you have to buy that. Okay.
Yes.
So that.
Yeah.
Hi, this is Yusuf. Thank you for guiding us. My question is that suppose a stock is $100 at present, and if and there is a potential that this stock is going up, and we do the call options to buy that option of that stock, and at that time the premium of that stock is around, let's say, $10. So if after 1 year that stock goes to $150 and its premium goes to $15, so is it mandatory for me to close my trade or not?
No, it's not mandatory for you to close your date. Close your trade. You can keep it until your your option expire. And basically your broker will give you whatever the price that it expired at. So you can, if your stock is going up, and you bought the option at $10 and expiration date is a week from now, and at the expiration date, the value of your option that you bought for $10 is $12. You don't have to sell it. Your broker will do it for you when it expires, and it will give it to people who actually want to exercise that call, and they will give you $12.
Okay. Additionally, when will you get into a profit? For example, if you buy a stock at $10 premium, when you will get into a profit rate?
When your option price starts going up, you will make money off of that option. So it's tied with how this underlying stock is moving. So your underlying stock is going up, your option price will go up, and I will show how it's related, like overview of it at the end of this presentation. So I know you guys have questions, but let's move ahead with what we have.
I just have a quick question, if that's okay.
Sure.
So question is like how does the covered puts work out? I know I have done selling the covered calls, but I have never done the selling of covered puts. Say I have a security like 100 shares of one stock. I want to basically sell the puts against it.
It's the same concept as selling covered calls.
Same concept. What is the maximum loss in this case?
Covered puts maximum loss is I've never done that before.
Oh, okay. Okay.
Yeah. I usually stay away from doing that because, again, I usually buy and sell security. But I'm gonna say that selling the covered puts, your loss is still exponential.
Oh, is it?
Yeah.
Exponential.
But I could be wrong. I don't quote me on that one because that's something I have never done before.
Okay. Okay.
I usually at most do the covered calls, but that's still very naked options.
Mm-hmm. Okay. Okay. Thank you.
All right. All right, let's move on. So what are some of the basic terms that you need to know when you're trading options? So most of you are familiar with it. I just wanted to go over it because just in case someone is very, very new to options. So there are two types of options, call options and put options. Call option is when it gives the buyer right to buy 100 shares at your strike price that that you decided as a before a specified date, the expiration date. So for example of that would be me buying an option. Let's just say Apple stock is trading as $125 and I buy an option to buy 100 shares of Apple at $126. And my understanding is that, okay, Apple is going to go to $126 by, say, January 1st. So my expiration date would be January 1st. So let's just say when January 1st comes and Apple is trading at $135, then, and I decide to exercise my option, I can still get 100 shares of Apple at $126 strike price that I bought that option for. So even if it's trading at $135, I have an option to buy for $126. Same thing with put options. A put option gives buyer right to sell 100 shares at a fixed price before the specified dates. So, and puts is basically betting against the stock. Call is betting for the stocks. You call is when you think the stock is going to go up. Put is when you think the stock is going to go down. Simple as that. There are many, many other different type of options that you can do, but this is like the basic things. Like I said, covered that we just discussed. There is covered call, covered puts. There is buying. There's selling calls, selling puts first. So there are many different things. But as a beginner, this is what you need to do. This is what you need to learn first before you deploy any of the advanced strategies. Other things that you need to remember or know of is premium. Premium is basically the price that you buy or sell options at. So option contract, premium price is whatever you pay for it. Strike price is your target price. Again, Apple example, my strike price is $126. I pay $1 for that options with strike price of $226 and expiration date will be 1st of January. So premium is $1, strike price is $126 because that's what I think Apple will go to by expiration date of January 1st. So those are basic things that you need to know, the terms. These are the order types. Buy to open order and sell to close order. Buy to open is an order that is placed when you want to open a new position. So this is you are buying a put or a call. And then sell to, I didn't put it because it's again, it's an advanced topic and should be doing this. So, but if you want, you can reach out to me and I'll gladly explain it to you again. But this is two of the basic things, basic type of order that you need to know. Now, when you talk about options, you will hear about the Greeks. And the Greeks are these matrices that are tied with the options. And there are delta, theta, gamma, rho, vega, all that. Two of the basic things as a beginner you need to know about is delta and theta. What's delta is the measure of option price sensitivity to $1 move in the underlying stock. And what's theta is measure option price sensitivity to each passing day towards the expiration. So I'm going to use the pizza analogy again. So let's just say current price of pizza at the Pizza Hut is $15. You have a coupon to buy that pizza at $10, and the pizza price goes from 15 to 16. Delta determines what the value of the coupon will go from 50 cents. So if we say delta is 0.10, so every dollar that your pizza price go from $15, so it goes from 15 to 16, the price of the cents to 60 cents. It goes from 60 to 17. Price of the coupon will go from 60 cents to 17 cents. So delta measure option price sensitivity. So basically how much your option or coupon price is gonna go up or down. So if go from 15 to 14, the value of your coupon is gonna go from 50 cents to 40 cents. And that's how it works. And then there's another one, that theta, because we have expiration date in picture, each day you go towards the expiration date. So let's just say your expiration date is Friday. Today is Monday. Friday is your expiration date. There are 5 days. And your coupon value, again, you're going to use the same thing again. The coupon value is 50 cents right now. Your pizza, and today is Monday. Theta value determines how much value you're going to lose. So let's just say theta value right now is 0.5. So with each passing day, your coupon value is going to lose 5 cents. So on Monday, it's 50 cents. On Tuesday, it's going to be 0.45 cents. On Wednesday, it's going to be 0.40 cents. On Thursday, it's going to be 0.35 cents. That's the theta value. It's not fixed. Again, I just want to mention these values are calculated and updated like every second. It's not fixed value, but I'm saying this so you understand the concept behind it and how it's tied to your option price. Another matrix that you need to know is IV, implied volatility. Market expectation of movement in the underlying stocks measure volatility for your underlying stocks. So the more volatile the stock is, the higher the implied volatility it has, and higher the implied volatility, higher the price of your option premium. Lower the implied volatility, the lower the price of the premium option. So let's just say on last Friday, CrowdStrike announced, last Thursday after CrowdStrike announced like really good earnings, and stock exploded, or Tesla stock exploded with the good S&P 5 inclusion. IV before the news was say 40% or 0.40. After the news, because so many people were buying it and so many people were selling in huge interest, and moved like $60 in the morning, the IV exploded too. It went from 0.40, like 40% to 78 or 80%. And because IV exploded, the option price, the premiums for the options also exploded. So if the stock is very, very volatile, it's going to have very, very high IV, and the premiums are going to be just as expensive. Why this is important is because let's just say Tesla had 2 really big days, and both days it moved $60 every day, and that will push it IV to like 200%. And you decide to get in a trade, you buy an option on that trade, and following 3 or 4 days, it doesn't move at all. It stays at the same price. It went from 500 to 620. It's just trading around 620. So nothing is actually happening. It's not losing its value. It's just staying at the same thing. But what happens is, because it's not moving so much, the IV for those options, for IV for Tesla, is gonna start going lower. And even if stock is not losing the value, your options are going to start losing values because IV is going low. IV is going down, your option price is going to go down, even if the stock is not going down. So all this different measurement are tied and used in determining the price of an option. So, but these are the basic ones that I personally look at. I don't worry about the gamma and rho and all those stuff because it's basically measure the changes in delta, measure the changes in theta, and all that sort of stuff. As a day trader and as a swing trader trading options, you don't have to worry about it. Again, as a beginner, I just wanted to discuss this topic with you so you're familiar with it. When someone says, oh, its delta is high or IV is high or IV is low, you will know what it means in related to the options that you own or you planning to own. So that's why I wanted to mention it here. All right. Before we move, any questions? If you want me to unmute, let me know. IV, it's usually on the option page. If you look at the details of the option, it should show you there. Some platform shows IV %. Some platform just shows implied volatility, right? The whole word. But it should be there. Every platform shows this.
Hey Yash,
hey.
Can you hear me?
Yes.
Hi Yash, this is Rajiv. I had a question. Actually, it is not related to options technically, but what is your favorite time frame to day trade? Like, what do you use? Like time frame of the charts.
Excuse me. I usually have two charts. You will. I'm gonna share my screen. You will see it. My setup basically. But I usually trade on intraday 5-minute chart and yearly daily chart. That's what I look at, and that's what I use to determine support and resistance level.
Okay, and do you, like, apart from using Greeks, do you use any factors about selecting the strike price of a trade? Like, for example, the lotto I didn't take the other day on Friday, the crowd lotto, which gained around 1000%. What was the, like, apart from the stock move, what was the factor which made you select the strike price?
So basically, that was the third trade we made for crowd, right? We made it like a couple of times before that. So, and even last month, I've been looking at crowd since a couple of months now. I bought long-term swing in anticipation of earnings, and that one went 300%, so I sold it. But basically, I did it because I'll show you in the chart why I did it. Because strong was in the stock itself, the chart was in uptrending, and 162.5, the strike price that I chose was breakout or make a breakout level. So if it were to cross it, I knew it would go, the next level would be 165. If we were to fail it, I knew it would start coming down. So I chose that because of that reason, because it will determine, like, if it fails there, I know I have to get out of the trade. There is no ambiguity there. If it crosses that, then I know it's going to explode from there because it's a very hard level. So that was one of the reasons I chose 162.5 for both of my trade. That was the level I chose.
Yes, as you said previously that if the option expires, so your liability, you are responsible only for the losing of premium, correct?
Correct.
So you are not liable to purchase. Let's say you bought the contract of 100 stock at $100. So it is 1,000. You pay the you paid the premium for $10 for $100 you paid, and now at the expiry date, contract expired, so you lose the premium if you don't want to buy that stock. Correct?
Correct. Yes. So you
Yes.
so when it expire, you have two options. You can exercise that option, or you let it expire worthless. Exercising means buying that stock. So let's just say you bought options for, and you're losing $500, but you don't want to lose it, then you decide to buy the underlying security for that price, and because you think that the stock eventually is going to go up, so you will make back that loss.
Perfect.
Or you can just let it expire.
Let it expire and then lose your premium. That's perfect.
Correct.
Yes. I've been calculating that numbers, right? So
Yeah.
I think I have asked you in chat room as well previously. If you don't mind, it would be appreciated if you make the example, because I'm the beginner, right? So
Yeah.
if you make the example, let's say we buy Amazon stock, one contract, 100 of holdings, and we bought on the base of the premium of $10. So if the Amazon stock going from 100 to $200, so how do you calculate loss and profit? This is my question would be.
Loss and profit in terms of what?
In terms of if you are selling if you're selling the contract, how would you calculate, okay, I made this one into it?
It's basically, it's tied to, it's trading options are just like trading stocks, right? So let's just say you bought 10 Amazon with strike price of $150.
Right.
That option you bought for $10.
Sure.
Right? And current price of Amazon is $100, right? So if it goes from 100 to 150, your strike price, then the option that you bought for $10 is going to go from 10 to 15, for example. It's not straight up, but, and then I decide to sell because I bought that option for $10.
Right.
I am making $5 off of that option. That's 50% return.
Right.
On my investment. And then I'm like, okay, you know what? I'm going to sell it here. It also depends on the resistance and support level that you draw on the chart. If it's getting near this, take some of my risk off of the table. And if I have 4 options, I'm going to just sell it one at this level. So even if it goes down, I don't lose like everything, like all of my profit. I actually captured 1/4 of it. And then if it goes up, so if you follow my alerts, you will see that I keep selling, even if I anticipate stock to go up. At every support and resistance level, or every target price, I sell some of my options because I want to secure that profit. You never know when it gets the rug pulled underneath it, or when the bad news comes out, or when it changes the direction and just drop. Like FSLY, if you saw it on the Friday, like it was keep on going up, and midday just starts selling out, and it went from like 96 or something to 88 in like matter of minutes. So basically, because of that reason, I keep selling it at every single support and resistance level, or whenever it reaches my target, I sell it like half of it or 1/4 of it.
As soon as the price of the stock is coming down, your premium is going down too. So
correct,
you want to
yes.
keep your profit, save your profit. I see your trade log too. It was great. Every day you are saying, I sold half of the position, I sold quarter of the position. So you are securing your profit,
yes.
right? So your profit would be, if $10 premium to 15, so your profit would be on this contract is $500, correct?
Correct, yes. So I sell one. I bought 4 options. I sell one at $15, and then it goes up again to $18, and I sell another one at $18, and then something bad happened. Stock started coming out, market started crashing, so it started going down. Then I sell the rest at like $13. So that way, I maximized my profit. If I were to wait to sell all of it, then I would be selling all of it at $13, and that would limit my profit that I would have made. So this is how you stay in a trade longer. rather than sell. But if you're buying one, right? If you're buying as a beginner, I usually encourage people just start by buying one option, one contract, because that's how you're gonna learn. And when you're buying one option or one contract, have your target in mind. Okay, if the stock is at 162 right now, if it goes to 165, which is the next resistance level, I'm gonna sell it. And then that's your plan. That's your trade plan. I'm going to buy it at this level. I'm going to sell it. Once it gets to resistance, no matter what happens, I'm going to sell it here. And that's it. That's your trade. You followed your trade plan and you made $300 and you sold it when you were supposed to sell it. And like I always say, and what Twitch just mentioned, you never go broke taking profit. But that's how I determine when I'm selling it. I already have targets in mind. When I enter the trade, I already have resistance and support level drawn on my chart when I enter the trade.
I agree. Thank you, Brayesh. As you always said, plan your trade before you
Exactly.
make it.
Exactly.
Thank you so much.
No problem. Okay. Let me switch over. So we're going to go to the Discord and how to read alert. I'm going to stop sharing and I'm going to reshare my screen again.
Right. Hey Yash, meanwhile, I just have a couple of questions.
Sure.
I need to ask. One question was around the implied volatility, as to, so when you say if there's an explosion in IV, then the premium price will also explode. Is that true for both a call option and a put option, or is it just generally the case for call
No,
option?
it's for both. It's for both call and put option. It call and a put option is how you, like, the type of the trade you're making, but the price of the option is controlled by all of this, like IVs and delta and theta, and all that is calculated for every single type of the trade. And I'll show you. Let me share my screen.
Mm-hmm.
All right. Can someone confirm what are you guys seeing right now?
It's a screen.
Yeah, can you see the E-Trade screen and the Discord? Are you seeing both?
We see the full screen.
Okay, perfect. So, all right. So this is the crowd trade. I'm just gonna go over this trade from Friday. Hopefully it will make things clear for a lot of you. So this is the trade from Friday. And this was the first time I bought this this crowd. So I bought the crowd option for 162.50. C means call. Crowd is basically the ticker name. The December 4, I forgot to write it here, but December 4 is the expiration. 162 is the strike price. This is how much I paid for the option itself. So if you come over, this is how by the way my screen looks. I have instead of Discord, I have my watch list and screener for the moving stocks for that day. But basically I have 5-minute candle here, and then I have the daily yearly chart with the daily. So this is where I draw like the support and resistance here, and I draw it here as well, just like as you can see, these are the levels that I drew from the before. So basically when it went down here in the beginning, when it first opened, I bought that option because it reached to the support that I drew at 157. It reached the support. So I was like, okay, you know what? I'm just going to buy this option because one, it's cheap. It's only 60 cents. And another thing is that I know that Crowd reported really good earnings here, and there is really no reason for it to sell. So that's why I got in. And then it started going up, like the next 5 minutes started going up, and I was like, okay, you know what? It's perfect. I'm in the trade, staying in the trade. And then it went here at this level, which is the resistance level from before that I drew. So I was like, okay, as soon as it hits this resistance level, I sold 1/4 size. because it was like same day expiration date, the IV that you can see here would be very high. So for 165, by end of the day, it was like 151. But at that time, it was like about 80%. And this is how the option chain looks. It has the strike price in the middle that tells you, okay, this set 170, 175, 167, blah, 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 blah. Bid and ask. Bid is what people are willing to pay. Ask is what people who are selling asking for. And then there is delta. Delta, do you guys remember what delta is? Delta is tied to the underlying price moment. So for every dollar your stock moves, this is how much your options price is going to move. So delta is at 66.66 for 165. So every dollar that CrowdStrike stock moves, this is a very high delta. And that's what you should look for when you're entering a trade. Higher delta means the minimal movement in your stock will be a major movement in your options. So that's why if you buy the stocks that are like further up, further out, it's very low. And that's why you want to kind of like stay away from it, because 222 to make $1 off of this option, your stock has to move like $10. Whereas here it has to move $1. So that's why I keep an eye on delta. And that's why delta matters, because it determines how much your option is going to move when your stock moves. That's how they are tied. And then you have implied volatility. Implied volatility is basically tells you how volatile that stock is and how it's going to affect. There is a calculation somewhere on the internet, you can find it. There's underlying calculation that puts all this together and determine the price of the option. But that's that. And then I just have like last change, dollar change, total volume, like how many of this option, how many of this option has been traded. As you can see, when I mentioned that the volatility is lower, so this is what it means. Like, oh, there's only 434 options traded for 162.50 strike price that day. And open interest meant how many people have open orders, like how many people have already put in the order but have not executed yet. So, but you see how low it is compared to if you look at the stock. Compared to if you look at the stock, like, oh, and this is how my other screen looks basically, but compared to like 19 million, 78, stuff like that. So it's very high volatility, like very low volume. Going back to this one again, where's the crowd again? Sorry. So you go back to crowd, and so that's when I sold it, and it goes up, and then I sold, like it had a little bit of struggle. We came back down here. So I was like, you know what? I don't want to take more risk since it's same day expiration. So I sold more at 110. And then stocks kind of exploded from there and went all the way here. So I sold some for $2 and then I kept the rest. And then when it came back down and came back up again, because of this volatility, the stock prices jumped, like the option price was jumping up and down too much. So I got out at $3. And then when it came down here and went all the way up here, that $3 option went to $6.10. So if I were to keep it, I would have made 1,000% gain on my investment. If I were to invest $60, I would have made 600. And if I were to invest 600, I would have made 6,000. But that's how I personally trade. I always trade on support and resistance level. And I put like, you guys who are part of the channel, like it's timestamp. You can see it. Like I put it as soon as I take it. And the whole point is that you can see when I'm buying it. So if you were to look at here and you would have, and if you had the same resistance and support level, you would have known like why Yash is buying at this level. Why is he selling at this level? And then I made another trade because it was so strong. The stock was so strong. I made another trade, but instead of buying the same week expiration date, I bought December 11. And I bought, again, same strike price because that level was very crucial for me. And it jumped from, it came down to this level and it held the support and it went back up. It started going back up. And that's when I got into this second trade. And I bought that option 162.50. It was already at 162.50. And I bought it for $44.50. And then this was beautiful. It was keep going up, and at some, like every single, like when it hits here 165, which was the resistance previously, I sold some of it, and then it went back up at this level. I sell more at $7. When it banked to this level, I sold more at like 760 and 840. And then it started coming out, and I was like, you know what, like I'm just gonna be out. So I sold at this level right here. The last one at 840, and then it started coming back down, and I think right now it's at 685 and 790. But that's how I made that trade. And if you look at it, I'm going to show you, if someone can pull that out calculator or something. I really want to share something real quick, and it's like an example of how the delta price are calculated. Affects your option, right? So this is where I sold last of my crowd, and this is where I bought. So can someone tell me the difference between 168.50 and 162.50? I'm just gonna round it. I think that difference is about $6. Yeah, $6. Yeah, $6 or $6.1. Now, yeah, so now take that $6 difference. So for, like I said, delta means for every dollar your stock moves, your option moves that much. So $6 is what crowd moved from 162 to 168. So that, can you multiply 0.66 with 6?
It's 3.96.
3.96. So that's that much my stock and my option price should have moved, because for every dollar it made 66 cents move. So for $6 it made $3.96 move. So now come here, I bought my stock at 450 and I sold it at 840. What's 840 minus 450? It's about $4 difference for 3.9. And what was the delta times the difference of the moment in the stocks? It was like 396, right?
Yeah.
So as you can see how it correlate, like the option price that moved here equals to delta times the difference when I bought the stock price and when I sold the stock price. That's how it's related. And because it was the same day trade, the theta price didn't come in picture, which is the time, like how much value your stock loses with each passing day. Because it was the same day trade, the theta value didn't matter as much. And IV was going up and down, but it approximately, you can see how delta affected the trade. So if I were to buy a delta price that's like $1, then I would have made from my option would have moved $6 from 450, and I would have been able to sell it at like 1040 or 1050. That's just to give you an example how delta and how this GRIX and stuff comes in pictures. All right, and that's all I wanted to show you. I'll just quickly go over our channel as well. So a lot of new people joined, and I put some of the good info here in these two channels, the knowledge share channel. This is where, if you are planning to stay with the channel, then this is where I post my live trade as I take it. This is for the stock. I do trade some stocks. We all trade. The other admin, my partner, Hardik, he makes some trades here as well. We post it here. There are swing trades where we post it. Our swing trades where you buy it and you forget it, and just wait until your stock reaches the target. Those are the swing trade. Those are good for people who doesn't stay on the channel or doesn't stay on the, like, keep looking at the stocks all day long. They have like part-time traders basically. And this is where we do like the people can talk and ask questions like during the live trading hours. And yes, and this is where we all share our profit and losses and share our what we did that day. But yeah, I think that's what's gonna conclude what I wanted to share with you guys. I hope it made some sense of trading options and what goes in it. And feel free to reach out if you guys have more questions. But I will hand it over to Hardik.
Hey, Yash, is it okay if we ask further questions on the...
Yeah. I'll open the channel once once this ends, or we can do actually we can do it right now.
Yeah, the one question I had was around the calculations that you just did around delta. So the option chain that you had open where the delta is around 0.66 for that particular trade, that gets updated every second, right? Or
correct? Yes.
So how do you, and what was the window of your actual trade from 4.5 to 8.4?
That was about an hour, I would say.
So the average delta value for that hour has to be around 0.66, right?
Yeah, it stayed around the same thing. Like I said, delta basically means how much your stock would move. It doesn't, and delta is also tied with the implied volatility. So it's calculated underneath, but it doesn't move as much from like minute to minute or hour to hour. It does move a lot from like a day to day. And especially when your IV is dying, your delta price starts going down as well, because the underlying stock movement expectations goes down. So right now, the delta is high because the movement in the stock is higher. If it were to move like $1 in like last few days, it were to just move like $1 or $2, then the delta value would be lower too, because we are not expecting any huge movement in the stock itself.
Higher the delta, higher the premium as well, maybe?
No, higher the IV, higher the premium. Delta, like the premium is actually calculated by all the Greeks and IVs and everything. There is underlying calculation that happens for that. But you like personally, when you're buying or selling stock, or personally when I am buying and selling stocks, I am just looking at, okay, at this point, if I'm buying the stocks right now, and 80% of my trades are day trades. So if I'm buying this right now and the delta is hovering over like around 60 cents, 66 cents, then I can be sure that it's not gonna, like within an hour or two, it's not gonna go from 60 cents to like 45 cents. At most, it will go from like 66 to like 60 or 66 to like 70. That's not gonna be huge difference in delta, because for that particular day, the stock is like volatile. So it's gonna keep on doing what it's doing. You might see that difference if like a lot of times the stock market makes big move first couple hours and then dies down and just trades sideways. That's when you start seeing all this value start decreasing slowly. But if that happens, then you get out of the trade.
And how do you calculate
Yes,
the
can I?
support and resistance levels?
Sorry, go ahead. One person at a time.
Okay, sir. Yeah, yes, Rajiv here.
Yeah.
Hello.
Yeah,
What
go ahead.
factors determine your stop loss? Like, what apart from your risk-taking capacity, everyone has a different risk-taking capacity. But what factors does what factors take into count when you are putting a stop loss for a trade? I'm sure you must be having some stop losses.
Yes.
Is it the underlying? Is it
Yeah.
the underlying stock price?
Yes, correct.
Or
So for me, if it's a lotto trade, I don't set stop losses because I'm willing to let it go to zero. It's not the case for everyone.
Yeah.
So what I personally do when I'm doing like weekly trade, what I do is I basically put a stop loss, mental stop loss, when near the support level, like a major support level. So the example that I just gave for CrowdStrike, if it were to break below 157, the low of the day, then I would get out of the trade because I know it's not. Once it breaks that level, it's probably gonna go straight down. So if it gets that level, I look at the option price, whatever it is, I just get out of it. And
So if you so you look it on the closing price basis, or you just if it breaks intraday also you are going to get out of a weekly trade.
If it breaks the intraday, I would get out. Another thing that determines that is like how down I am on my option premium. When I first started it, my maximum loss that I would take for each option trade was 50%. If it goes anything below that, no matter what, I will get out and I will protect my capital. So 50% was the max amount of loss I was willing to take when I first started out. So that way, because when you make money in options, you are easily making 50 to 100%.
Yeah.
So if you are keeping your stop loss and if you are nailing your trades and 70% of your trades are working and 30% that not working, you're getting out at 50%, you're preserving your capitals. So at that time when I first started out, I wouldn't rely on the underlying stock. I would rely on my option price, because I don't want to lose more than 50% on my investment at any given time. So you need to decide, but then again, like if you buy a 60-cent stocks or 60 cents option, it's not going to make that big of a difference if your account is, let's just say, like if you were trading a $5,000 account, if you lose like $120 or $200, then it's not going to make that much difference. So it's better to just let it play out. But if you're trading stocks or like an Amazon option that's like $8, so that's like $800 at that time. Now you have to protect your account because that's like almost 10% of your total account. So don't lose more than 5% of your total account on any given trade. So if the price is that high of my option or the premium is that high of my option, I would get out at 50% and save that another $400 and forget about it and reinvest it and make that back, rather than just wait and lose all 800.
Thank you very much, Yash.
You're welcome.
Oh, that was the question actually. I was more worried about the stop loss factors than.
Yeah, so you need to basically decide for yourself. I can't tell you, there is no straight answer. I can tell you what I did when I first started it, and that's what I did. Like if it was cheap option, if it was like under $3, then I would let it play out. Because when I entered the trade, I was like, okay, I'm willing to lose $300. But if it's like a $8 or $9 or $11, that's quite significant amount. And at that time, I'm like, okay, you know what? If it's $1,100, then if it goes below 700, then I'm gonna get out and I'm gonna save that. I'm gonna preserve that capital for another day. So it also it depends on you and how you go about trading, but that's how I was thinking when I first started it.
Okay, thank you.
Hello.
Yeah, hello.
Hi, Yash. Firstly, thanks for doing all this for us. I had a quick question about something related to what Rajiv asked. I'm just starting off, so when you started off, what was your basic profit limit? Like, for example, I bought a GMER option the other day. It was I bought it for like 450, and I know you told me that you mostly sell it at resistance. So, for example, if I'm making a 20% profit on an option I bought, is that a good level to? So I brought, for example, I brought 3 options and I sold 2 of them for a 20% profit, and I was holding one. But yesterday GMA dropped, so GMA went down again. So
Yeah, and that's what I've been saying. Like you protected your profit, you sold 2, and then you kept 1.
yeah,
So
now
even
I'm
if,
just gonna ride that one.
yeah, exactly. So that's how you protect your profit. And how much I'm gonna like when I enter the trade, I don't have like I don't think like, okay, I'm gonna make 50% on this, or I'm gonna make
Okay, there's no levels you have. Okay.
no, I don't have any of that in mind. What I look at is the price action, like, okay, how stock is moving, what it is doing. If it's choppy, like if it's going up and
Yeah, if
down,
it's
up and
choppy,
down,
then it's an issue.
yeah, then it's you get out. Like, but I always say you don't go broke taking profit. So 20% is still 20%. 20% is what you would have, like you would never make that much, or
On
you
a
would
stock.
rarely make that much on a stock. So 20% is still really good amount of return, you know. But like I said, like what you did as well, like write it down. Like it hits your price, it hits 20%, you sell one, and then you wait. If it hits 40%, then you sell another, you wait, and then if it hits 60%, you sell another one, and you get out of the trade. But that's how you protect your profit and also stay in the trade longer if it's going in the direction you want it to go. And that's how you maximize your profit while protecting yourself. Because like what happened with your trade, it went down the next day, and there's nothing you can do about it, and you couldn't have predicted it. But
Yeah, true
because
that.
but because you sold those 2 stocks or through options, you maximized your profit. So
okay, so basically you have nothing to determine the levels.
no, I determine it as I go.
Okay, cool.
Yeah.
That gives me that gives me, because I thought maybe 20% is good enough, I should have got out. But then you also mentioned to Rajiv that there are way where you can make like 100 to 200 to 1000% yesterday.
Yeah, exactly.
So you cannot really have a set limit. Okay, cool.
But
Thanks a lot. Yeah.
And if you look at that trade that I made, yes, it went on to like 1000% difference, but I got out of the trade at 400%. I was like,
Which
okay,
is seriously good.
yeah, which is seriously good, and I'm happy with it. I'm not gonna complain that I didn't make another 600%. So profit is profit, and you never go big trading it. So as long as keeping like your eyes or your goals would be consistency, like every 10 trades you take, 7 should return with profit. And if you do that, you're going to be able to increase your size going forward, and you're going to be making more money. And because you're buying more options, you will be able to stay in trade longer, and all that comes later in the time. Right now, if you're starting new, your goal should be consistency. Your goal should be at least.
I'm kind of like in a lot of options losing money, so I'm just panicking.
Yes, exactly. So your goal should be taking quality trade and consistency
Yes.
of at least 70%.
Yes. And sorry, another question too. Like how many options would you want to be at the current state of time? Like 2 or 3 is good as a good number, or would you want like stick to 1 or 2 maximum?
How many trade you mean?
Yeah, how many like I seen that yesterday you just played with crowd and maybe another one too. So maximum you do is 2 or 3 in a day, and you just play big players. So
it depends. Honestly, it depends. Like yesterday, crowd has all of my attention because the price action was really great, and it was doing everything I was thinking that it would do, and all my
efforts.
All my plans were working out for it to the T. So I wasn't gonna lose my focus by focusing
on something else. Okay, I get it.
Yeah, it has my full focus. But if a lot of things are moving, then I would be buying a lot of things.
Okay, you just have focus on like 2 or 3 names, and you just look at those in a day.
Yeah, and there are like I bought Snap, I bought Intel, I bought Alta yesterday as well. I made a few trades.
SPI too, I guess this stock.
Yeah, SPI. So I made full trades, but I made a lot of trades, but those trades are like longer term, but for the same thing, I keep my eyes on the price, like one thing that's moving and one thing that's doing what I want.
Yeah, I get it. So for the future, you're securing yourself. Okay.
Yeah.
Okay. Cool. Thanks a lot. That's really good.
All right.
Appreciate it,
Okay.
man.
All right. Let's move on, and then we'll continue the question answer later after this. Hardik, are you ready?
Yeah. So thank you so much, everyone, for listening, Yash. And I would like to thank you, everyone. We have reached to 151 members right now. Our community is growing, and it's so fast now. We have been glad, Yash and me have been helpful for you since long time. But we want to take this as a opportunity to go in the bigger level, to maintain the existing and sustain the existing model. We have some big news for you. So here we go. Okay, so we are coming up with the option plus subscription. These are the benefit. What we mainly gonna give you a dedicated server plus post environment, wherein all the trade we take on the daily basis, maybe more than 2, 3, 4 trades, which we take on a usual basis. Those are carefully crafted and drafted by one of us, and we'll be keep monitoring on the channel, and as well as we're gonna create that script for you, which will be give you a more beneficial. We are also looking forward to give you educational videos in that subscription, also exclusive interactive webinars. And one thing I should mention here that you should not be worried about the subscription amount, because the trade which you're gonna do, it's gonna pay it by itself. So the profit which you're gonna carry out, it's gonna be paid by the subscription. So you can also think for the support plus backup, wherein if you have any crashing, we can give you a one-on-one session. We can think about all the support and resistance level, how you should think about how and what should be your strategy. If there is any loss, you can think about sharing with us, and we can take from there. So it's a great way to join us as a subscription model. And these are the 3 options we have: per month, per 6 month, and per year plan. So this is going to be in USD. The price is 149 for the month and 199 as a CAD. If you see a 6-month plan, we are thinking of giving you a 1 month free as well as 2 months free for the per year plan. Now, coming back to our existing channel, see, we are coming up with the option plus subscription. That doesn't mean that you're going to leave us. You'll be still having the same benefit which you are getting in the channel right now. It is just that option plus is going to be a more powerful, and it'll be a separate platform wherein you will be taken care by one of us as an admin, and all your trades will be monitored by us, so that we can guide you where exactly you need to improve. So probably within a 6 month or maybe within a year, you can be like Yash, we can say that. So that's what we are planning. If anyone is interested, reach out to any of the admin. So Yash?
Yeah, so
can we go to the next slide?
Yeah.
Okay, so now we have ended our session here. Now we are setting up the Q&A. We have like 15-20 minutes. If anyone has any question, you can directly speak with us. Let me know if anyone wants to unmute yourself. So Sadagar, you can go ahead.
Hey, yes, and Hardik, thanks for this. It's an excellent. Question is about put. Can you take a moment and explain how put will work? So let's say I want to sell, I think Tesla will go down and I want to buy a put option. How does it work? If you can take an example, that will be great.
Yeah, so Tesla right now, let's just say it's at 500. You think it's going to go down to 450. Then that's your prediction, and you buy put for it. Put basically means like it's shorting a stock without shorting it. So you're saying that it's going to go to 450, and then you buy the put that allows someone to buy that stock at $450 price, right? Now when the stock starts going down, your put value starts going up because people will be interested in buying that stock at $450, even if it's at, let's just say, it goes from 500 to 480, and you have an options to sell Tesla for 450. So that way people will be able to sell it at 450. Does that make sense? It's harder to explain without like a concrete example.
Hey Yash, I have one question. So when you said you drew your support and resistance levels for a particular stock price, how do you determine those levels?
Okay, I know a lot of you has this question, and I was actually gonna create a educational video going over that. But for now, I will just quickly share my screen. Just give me a second. All right. So the way I determine support and resistance for myself when I'm looking at a stock is when I first start with the daily, the daily yearly chart, and I start drawing on the yearly chart where I see the support and resistance level. So this was the resistance Friday, and this is a lot of time it's not going to be clear-cut line. You will have to determine it yourself, but this is like approximately the support for like 156, 157 is a support for previous 2 days. So I'm going to draw it over here, 150, 156, 95, and then actually I'm going to draw it right here because this was the support. And this level, 155, has been support 1 time, 2 times, and 3 times. So that is a very strong support. So that's why I draw it here. So on yearly, you want to draw supports and resistance level where it has stopped or touched multiple times. So another level that you can see like approximate level is like 123.90 level because it has come to this level, came back up. It came to this level, it defended this level, it went down, but it came back up again and closed above that level, and then it went up again. And then again here, it came to this level, it went down, but it defended, closed above it. And this one time it did go down, but it defended that level, so it came back up. Here, then it did it again on this day, it did it again on this day, it did it again on this day. So that's a very strong support level. Okay. So that's another one I draw. You don't need to do here because it's not like right here. And then this level right here, this should tell you that this is a very strong support level because it came down to this level, came back up, come down to this level, 1, 2, 3, 4, and then this level, it just bounced around this level for quite some time. So that's another strong level. And then this one right here, 1 and 2. So that's another support level right here that you can draw.
So all these support levels, so what's the resistance?
So resistance is this. So support and resistance level are interchangeable. So whatever is your resistance become the support. So like, for example, this level, look at this 156 level. It was resistance here, it was resistance here, it was resistance here. But once it breaks above it, now it's a support level for this one. Now it's a support level for this one. Same thing at this one. Like this was a resistance level, this was a resistance level, but once it breaks above it, it became a support level here.
Oh, I see.
And we are also planning to cover this in a detailed format. This is a quite, same question we hear from everyone. What is the support and resistance level? We would like to give you a better understanding on this, and we would like to cover in detail. But
yeah,
today we would like to give you a basic information about the options so that you can start utilizing our channel and post your, own. You can start trading by yourself.
Right.
Okay.
But yeah, go ahead.
Sorry guys, I just interrupt you. Hello everyone. But my question is, the option plus, are you going to teach the new beginners just like me? I'm just a very new person in this field.
Yes, we will be teaching new people how to trade. We will be giving you one-on-one attention. My plan was to provide people with more understanding and more one-on-one attention, so we can go over the trade that you made throughout the week. We can go over, we can decide the plans for the next week. things related to that. It's not just for advanced trader.
Yes.
I think it's actually more beneficial to the beginners, so they can, like, you can learn the basics of it. You can ask questions anytime, and you can there is more one-to-one attention to you, and we can create the more educational video for the topics that you are having trouble with.
Okay, but like from the basic, like from the baby to like to the young age, you are teaching every single step.
Correct.
Is that
Yes.
clear?
Yes, correct. We are teaching everybody. For advanced players, we can go in the advanced topic. For beginners, I can go over like the basic stuff like I did today, but more in detail, because we only had like an hour or two today.
Okay.
Basically,
So
we are aiming here to, more oftenly coming up with the Q&A session wherein
yes.
all your doubts can be cleared up. It should be in the frequent, fashion, so that you can post us directly. You can clear it and make yourself better as a trader. You can earn the profit out of it, and that's our aim.
Okay, and how to subscribe it? Like from
We'll-
which platform or where I can go and sign up with you guys?
we will come up with, we'll provide that information. We just wanted to announce it today, so people are aware that we are going in that direction, and we will be, if you're interested, just DM us, and we'll put you on the list. And then once we have all the detail, we will share it with all of you.
Yeah.
Yes, please.
So if
All right,
anyone
perfect.
is interested, they can reach out to admin so that we can give you more information. Okay.
Hello, hi admin, this is Yusuf. So thanks for giving me the mic. I wanted to share my screen and ask a question from there. Can you allow it?
Is it related to options?
Yes, option trading.
Okay, go ahead.
Because I was getting the message that host disabled participant screens sharing.
Yeah, basically the setup has done in such a way that the screen can be shared by only host. I'm sorry for that.
Okay.
We were actually planning that into a subscription model.
Okay.
And the participant also can share the screen.
Okay.
I'm sorry about that.
Okay, I'll try to rephrase my question is, so right now in the Air Canada stock, the call option price is 1.89 for 27 strike price, and the current price is 2750 CAD. So my question to you is that if I buy a call option at 27 strike price and the premium is 189, at how would the premium get increased if the price changes from $27 to $28 in the coming days?
It depends on the delta, and it also depends on the IV, and it also depends on the theta value that particular contract has associated with it right now. So without looking at it, it's hard to tell. But if you, like the example I gave you, like if the delta value is 0.66, so for each dollar that stock moves, so if the delta value is say 12 cents or 0.13 or 0.20, if that stock go from say 27 to 27 to 28, your option price will increase from 1.08 or 1.80 that you said by whatever the delta value is. Now it could change like from day to day because your theta value will be decreasing. So that also comes in the picture. But if you're asking about today or asking about Monday, then if it goes on Monday from 27 to 28, whatever the delta value is what it will affect your option price.
Thank you.
Mm-hmm.
Thank you.
You're welcome. Anybody else has any questions?
Yeah, we have Sunil.
Hello?
Definitely, go ahead.
Yeah, like regarding to the subscription, I am thinking of that, but I'm a purely part-time trader and I'm very beginner. So like I cannot pay attention whole day to the screen. So by hourly I come and check. So how you will be able to assist me or help me?
So for you, we will have swing trades. I showed it on the channel. We will have the similar setup for the private channel as well, where we will post the swing trades where you buy it and you forget it until it either hits your stop loss or your target. So you don't have to keep on checking it. Also, we will post. We'll go over it one-on-one, but from right now, I will tell you that we will instruct you, or we will encourage you to buy only the options that has longer expiration date, not the same week or same day. Like a lot of plays that we do, you won't be doing it, but I will be coming out with a special long expiration date trades for you. For the people who doesn't check it every day or every hour.
Right, because I am working full time and I cannot go to the trading site and buy or sell immediately.
Yeah.
No, totally understandable.
Yeah, great question, Sunil. I think some of other person also have the same question. So we totally understand that, and if we talk about other troopers, everyone are working in some other field. So probably the daytime, it's mainly they are doing work as well as they are doing the trading. So we have that assumption in our mind, and we're gonna keep that with the longer expiry date. If you see the yesterday date, Yash has posted about the Intel, it was January end date. So likewise, you will see some of the posts wherein if you check the the expiry date, it'll be longer. So even if you're coming up after 1 or 2 hour posting, you can still get the same price. But if you see the closer expiry date, the price will get changed. So you should look for the longer expiry date script, and which we're going to cover that.
And we'll guide you on that.
Yeah.
Okay, thank you very much. And this is true for the stock trading too, right?
Correct. Yes. No, it's true for stock trading too. I post a lot of swing trades in the channel, and people have been doing it and benefiting from it, and there will be more of that as well. So you don't have to be the option trader. You can just trade stocks, straight up stocks, and you can still do the swing trading where you just buy it and forget it.
Thank you very much. And that will be true for not a high volume traders, right? Just like limited amount of money I'm putting in my account or trading, that will be helping out too, right?
Oh, yeah, correct. Yes.
So here we're going to give you a plan. Now it's upon your budget. You can choose that whether you want to go with the 1 option, 2 option. We would highly recommend with the lesser quantity, 1 or 2 at the beginning level. But at that point, that total cost should be maybe nearly $20, $50, like that. It should not be a bigger amount.
Correct. Yeah. Thank you.
So thanks for asking, Sunil. We have a next question from Suresh Kumar Patel.
Hello, Yash.
Hey, hello.
Yeah, can you suggest a good app for Canadians, for trading options?
Interactive Brokers is what the other admin Hardik is using a lot. That's what I have been using as well for the people that I trade for who are from Canada, and a lot of people in this channel has said very good things about Interactive Brokers if you're in Canada. So that's what I would suggest. The other one is Quest Trade. I haven't heard that many reviews about it, so I don't know anything about it. Like Sunny Girl just posted in the chat, like he uses Interactive Broker and it's amazing commission and good feels. So yeah, that's what I would suggest.
So if I talk about Questrade, Questrade had a very good platform, but the commission rates are really high. If you go for the smaller quantity or higher quantity, the rates are between $5 to $10. Wherein if you see the Interactive Broker, they're in such a low commission rate. It's 30 cents, 60 cents, like that. So you're gonna get the great benefit in that.
Okay, I will look in.
Yeah, so probably for option, either one of the platforms should be good. If you're just looking for a Canadian equity stock, then Wealthsimple should be a good option for you.
And one more question, suppose trading options, you have to be in front of the screen for a whole session, or just for a couple hours or 3 hours, that's fine?
It all depends. Like I said earlier, that you don't have to sit on your computer. Like usually most of my trade comes in first 2-3 hours when the market opens, and then I keep an
Okay.
eye on it. So if you can sit like first 2-3 hours, that will be perfect. But I will also be putting like longer term trades where you don't have to like sit on the computers 24/7, where you just buy it and then 2, 3, 4 days later you sell it, or like a month or whatever. But yeah, you don't have to be on the computer. Like most of the people who are in the room and then the channel, they have full-time work, so they are
Okay.
not on the computers all the time. But that will be
Yeah.
something for everyone.
Yeah, like I'm working in like a night shift, so I can like stay awake up to 12 o'clock, and then I have to go to bed. So trying to, yeah.
So basically
Okay.
here you can just keep a handy mobile application in your hand. Once you
Yeah.
hear in the Discord that we are posting this particular script that might gonna be on the longer expiry date, then you should take it maybe in the same day or maybe next day.
Okay.
You're gonna get the nearby price for sure
Okay.
because
Okay.
it's a
Thanks.
longer expiry. So you can put that order through a mobile app. You don't need to stick in front of the computer screen all the time because that's what we are here for you. We are
Thank you.
actually going to do a research for everyone and we're going to give you the result. So mainly your task will be reduced. You just need to place an order whenever it's
Yeah.
convenient for you in the same day or next day.
Yet I haven't started like options. I'm a newbie, so just I mean you guys like declared that you're gonna start a
Mhm.
learning or a teaching session, so might be I would be interested in that one too.
Thank you so much for showing your interest. Please reach out to us, one of us. Okay.
Thank you. Thank you.
Thank you. Thank you, Suresh. Um, Prashad, I guess, has the question. Prasad.
Hey, hi. Good evening. It was a very good session on options. Thanks a lot for that. My question is about your subscription model. So, what it is going to be like? Like every day, will you be giving your perception about some entry and exit points? Mainly, I'm looking for stock trading. Uh, or will you be providing a platform kind of a thing which we use for Quest Trade, and where you will be monitoring our activities? How it is going to be?
This is basically going to be more what do you see right now. It's going to be similar model. You will just have more one-on-one attention. There will be more trades that I will be putting whereas I take it, so you can make your own decision, and then if you want to take the trade, you can take it right away. But basically it's going to be like that. You will be making decision for yourself. We won't be monitoring your investment. We won't be asking you for like logging in password or any of that, so like any personal information or anything like that. It will just be more one-on-one attention to you and your needs and what you need to do, like if you're a regular trader, if you're not regular trader, stuff like that. Or if you want to like do the more trades, there will be more trade posted. Like I'll be posting pretty much every trade that I take. Hardik will be posting more about the Canadian stocks that he's been trading, and basically it will be more active, and there will be more opportunities for you to take trades and more opportunities for you to learn how to take trades yourself as well.
So
Okay,
Prasad, you
that
can
answers.
think of the
Yeah.
same model which you are getting in the code. It's going to be a same model, but much more powerful, wherein you will get an attention from the admin about all your requests. And
Uh,
yeah,
okay,
go ahead.
like see, on weekly basis, like you have that session right where you discuss the 10, 15 stocks. So is it going to be similar but more frequently kind of a thing, or maybe on that channel you will more frequently post some good tips, or something is coming down, something is going up? Because I'm not an active trader. I have to do my work from home job for 8 to 9 hours, but on the side screen, I always keep this thing open, and I just started to learning. So yeah.
Yes, you're right. It will be more active. There will be more trades for you to take if you decide to take. There will be more of the interactive webinar sessions where like this, but more frequently, where you can ask questions. We can clear your doubt. We can educate you. If you have any particular things that you want to learn, or you have questions about, you will have our attention. We will arrange that webinars, or we will create an educational video for you so you can learn it yourself as well as the others. But yes, it will be more frequent.
Okay, that answers my question. Thanks a lot.
Mhm.
Yes, thanks a lot for your information. That answers
You're
my
welcome.
question. Thanks.
You're welcome. Thank you.
Okay, Sikandar, here you go.
Sorry, I just logged into my brother's ID. That's
No
okay.
problem. That's fine.
No worries.
Yeah. But the one more thing, are you going to teach us even the fundamentals, like, like how to calculate every single trade, like the fundamentals, how to read the chart and all that stuff?
Yes, correct. We will be going over, like, my plan is to, because I think there will be more like more people who are at the beginner level. So my
Yes.
plan is to go over the very basics, like I quickly went over right now, like how to draw support and resistance levels. That's very basic things that you need to know if you're planning to get in a trade, because without it you will be lost. So those are like some basic principles that you need to
Yes.
know. There are basic concepts that we will go over. If you have any questions at all, we will be more than happy to answer. And if it's something that's requires more detailed attention, then we'll either create an educational video for you, or we'll schedule an interactive webinar where we will go over with you and other people who are part of the group, and you will be able to ask questions, and we'll be basically teaching you one-on-one sort of thing.
Okay, so like I have a last question for you.
Yeah.
And thank you for this webinar. It's really a very good platform to learn, because of like there's lots of people out there, they're teaching it, but I know like some of them are really good. It's hard to find the diamond. You can find the pennies, like, you understand me? You can
Yes.
hard to hard to find a good person who can teach you from the like starting to till end. It's every day you are learning something, but the good people like you guys are amazing, man.
Thank you. Thank you so much.
Yeah, my question is like how you find the trade, like how you find like this one is a good one and this is going to swing up or this is going to swing down, like how you determine them.
We will go over that too.
Yeah, just
How I
yeah.
find it, but basically the way I do it is I like to think. I'm not sure if you have been part of this group or not, but I have been preaching one thing. I like to keep things simple, very straightforward. I don't use tons of indicators. I don't use tons of things. I don't, like, my charts are usually very clear, just support, resistance level, a couple of moving averages, stuff like that. I have very, very straightforward strategy where I can, like, how I find the stocks that I want to trade.
Yes.
Yeah, I like to keep things simple. So my strategy is basically I use some screeners. I have a list of stocks that I have compiled over like last 6 or 7 years that I have been trading seriously. And I have that whole list of stocks, and I go through those stocks like every night, see their movement, see their chart pattern, and if I see something that I really like, I put that higher on the watch list, and then I keep, and that takes my focus. So same thing that the CrowdStrike that I made, I've been looking at that stock for like past 2 months because of the chat patterns it's putting. It interests me. I was interested in the company, and I liked the chart pattern, and then I looked at the financials, and they were good. I studied their last quarter's earning reports, and based on all that, I knew that coming into the earnings, the stocks is going to go up, and if they report the good earnings, it's probably going to explode, and that's what it did. So when they reported the good earning on Thursday or Wednesday, that stock had my full attention, and that's what I traded on Friday. That's what I traded on Thursday, and so that's how I go about doing things. I pretty much spend like an hour or two every night to go over my list, to go over every stocks, and I also look at the stocks that moved that particular day on some good news, and I look at their chart pattern. If I like it, then I put it on the short list. If I don't like it, then I move on to the next one. But yeah, I spend like at least like 2 to 3 hours every night to go over everything that I have and the new things that are coming out. And basically it's all about chart patterns and what, like there are some other things that I trade, and there are some other things that I really like. And if that's the type of the chart pattern or price actions that's happening for that particular stock, I will put it in the short list, and then I will monitor that moves, and for the one, and then I trade that until it does no longer interest me.
Yeah, that's good. And like, I just want to ask you, like, how much you are thinking for the new beginner to invest the money in, like 2,000, 5,000, 10,000. What do
It
you think?
It really, that's a very good question. And it really depends on basically your goals, right? You can start, I tell people one of the reason I started with stocks because it didn't require that much investment. Like any business you want to start, like it's at least you at least need like $10,000 to $15,000 first to invest in it to get it up the ground. One of the reason I started with stocks is because you don't require that sort of investment. So basically it's up to you to decide. Like I can't tell you. I personally think that the good amount would be like 5,000. Like between 3,000 to 5,000 would be a good amount to start with, because it will give you a little bit of room to experiment with your strategies, a little bit of room to, like, if things doesn't go away like the very first couple time you started, like it will give you that wiggle room. I personally, when I started it, I started with $5,000 and I blew that account in like 10 days because I had no clue what I was doing.
Yes, I got you.
One more thing. Coming back to your question, basically on option trading, we can only suggest go with the individual account. Don't go with the tax-free account. So, whenever you're going for the individual account, select the margin option, so that with the less investment, you still get an option to go with the margin amount. Let's say you have invested 3,000. You might get an opportunity to deal with the extra 9,000 margin. So those are the things you should consider, being a new trader, that with the minimum amount you can still go ahead.
Okay, yeah, because like we are using the TD Bank, the tax free, like and so that's the thing, because I just still like new one. I trade the Apple, Facebook. Yes, like I'm like not everyday trader, but yes, I
So in
tried
that
those things.
case,
I lose some money, yes, but still, like right now I'm made my good moves, and yes, I'm good with it. And but the thing is, like, I don't know like which platform is really good one, because you heard the Canadian news like about the TFSA, like so I was
So
scared.
yeah,
I
so
don't know
I
what,
would
like.
not advise you to go with the TFSA or RRSP for options. You can go with the equity, but for options, I would strongly suggest you to go with the individual account, because in this, expiry will be closer sometimes it's going to be a longer, but your call should be, probably not to hold your option for the longer period of time. It can be, you can sell it off within 2 days or maybe within a week. So that's not a good idea to use TFSC or RSP.
Yeah, because they're charging $9 for the.
It's not about the commission I'm talking about.
Yes.
In a point of CRA point of view, it's
Yes.
not a good idea, because they will consider you as a day trader in the option trading, and that's not a
Okay.
good idea to go with. Okay.
Okay,
But
but
that can
anyways,
be,
you're going to teach us like
yeah,
with the
that's sure.
one-on-one session. Yeah, that's why I don't worry. Like, I'm happy to be in, and yes.
Yeah. So
Yeah.
we are mainly planning for the group session, but
Yeah,
in
that's
case
fine.
if you are not comfortable in the group and probably you
That's
have
okay.
a
I don't mind it too.
quick
Yeah.
question, we can go ahead in person. That's for sure. But that's
Yeah.
going to be a shorter in terms of in person. We are mainly focusing for the group.
That's fine. I
Those
don't
are
mind
going
it
to
either.
be Option Plus subscriber. So
Mm-hmm.
you guys should be comfortable with with all of you. Okay.
Yeah, yeah. Thank you.
Yeah.
I appreciate it. Thank
No
you.
problem. Thanks.
Yeah. Bye.
So do we have any other question? Sunny?
Yeah, hey, Shravan here.
Shravan, okay.
Yeah.
Yeah, Shravan, go ahead.
Hello. I think he cut
Yeah.
Can you hear me now?
Yeah, we can hear you.
Yeah, sorry. Thank you so much, Yash, for the session. I had very similar questions to the previous person who asked about the TD and whether you go for the TFSA and all. The second question I have is, I know you're going to teach about the technicals about support and resistance levels in the subscription. Are you going to teach us about the fundamentals as well? I know fundamentals is not something you look at when you're doing options trading. It's mainly the technicals, but you have certain scripts like Snow, which was a recently stock which went for IPO, right? So for those, you don't have much data into technicals. You have to rely on the fundamentals, right? So that will also be covered as part of the subscription thing where you teach about fundamentals.
Yes, correct. And you're right. As a day trader or as a swing trader, you don't look at the fundamentals as much. But when it comes to, like, I still look at it, like, for example, crowd play that I mentioned. When I first got interested in it, I looked at their financial sheets and balance sheets and their last earnings and how they did and how much cash they're holding and all that sort of stuff. I did look at it before I decided to put it on the short list. So yes, I will be going over that. If someone is interested, like, to learn about fundamentals and how it works, yes, I will be going into it over that, and we can maybe have an interactive webinars where I can show you guys how I do it. Sure. And teach you how to do it. So yes, if you're interested in it, then I would be more than happy to show you that.
Yeah, and also about the type of account, because currently even I'm also doing it in the TFSA with TD, just the equity trading. I'll also be interested to know what kind of account you need to open and all those as part of the subscription. If you're going to tell about it, it'll be great.
Yes, definitely. We will guide you with what kind of account. Hardik, the other moderator, he lives in.
Sure.
So he's very familiar with what type of accounts you need and everything that you need to do it for it, and he'll be teaching you, right, Hardik?
Yeah, that's right.
Yeah.
Yeah. That's all. Those are my questions. Yeah, Hardik, yeah, go ahead. You wanted
yeah,
to. Yeah.
Mainly, there is nothing like a requirement from our end. You can go with any platform, but we'll suggest you the right platform and right account, which it's going to be considered as safe account. We need to also think about the CRA point of view, wherein we should not be in a trouble as a day trader. So we should be sharing our profit as in a taxation point of view. So option is the mainly we should look with the individual account. But we can cover in detail what are the benefits and about that. Okay.
Sure, Hardik. Yeah. Thanks, guys. Yeah.
All
right. Sunny, do you have any question? Sunny Grewal. Okay. Any other guys who has any question? And do you want me to unmute you?
All right. It seems like we answered every questions.
Okay, maybe I can just unmute for a 5 minute, everyone. If anyone has anything to say about or give your feedback about it, you can go ahead. I'm going to unmute everyone.
Hi, Yash. Rajiv
Hello.
here.
Hey, Rajiv.
I just wanted to know, like, when are you guys going to announce make an official announcement for the same, like the subscription model?
We just
When are you
discussed this.
planning to, I mean?
It should be coming shortly. We don't have a particular date in mind. We still need to straighten out some of the structures and some of the details that goes into it, but we will be announcing it shortly.
Sure. Thank you.
Mm-hmm.
But if you are interested, please reach out to us. Any one of us.
Reach out to us so we can put you on the list, and we'll be the first one to get the email and all the details.
Yeah, we are mainly collecting the data. If anybody is interested, then we can go ahead from there.
This is me reaching you out right now. Count me in.
All right, awesome. Yeah, we'll put you on the short list then.
Yeah, thank you, Rajiv.
Okay.
All right.
So now anyone can unmute themselves if they want to.
Hello.
Yeah.
Yes, I mean, you talk about like account. I mean, you said like we should deal option trading with the individual account. I mean, not a joint or not a
No, no,
TFSA.
it's not about the joint or individual. Mainly, it's about not. You should not select a tax-free account. You should go with
Okay,
a
okay, okay.
margin
Thank
or
you.
cash handling account.
Yeah, but the joint account would be
That
okay,
should be
right?
fine. That should be fine.
Okay, thanks.
Yeah, but mainly do not focus on RRSP or TFSA.
Okay, thanks.
If any option is going for the longer expiry date, let's say for 2 months, those things you can consider still in the TFSA or RSP, but we still strongly recommend individual account just to avoid any kind of uncircumstance from CRA.
Okay, thank you.
Yeah.
Hi, admin sir.
Yeah.
I have a question.
Yes, go ahead, Sunil. Oh,
Okay.
Mehul?
I have account right now in QuestTrade and it
Okay.
is in TFSA.
Mhm.
So if I want to move to interactive broker, as you mentioned,
Mhm.
how should I move it from QuestTrade to IB?
Yeah, so if you go into the setting, the management setting, account manage setting, you will see an option position, transfer position, wherein you can choose another provider and they can transfer you from QuestTrade to interactive broker. So I would say that, you can keep more than one broker also if you want to. There is nothing bad into that, but mainly if you're doing an equity and all that, choose the platform as in with the TFSA or RRSP, and for the option it should be individual. That's a good idea to go from there. And the broker you should select based on the commission rate. I see interactive broker has a good commission rate. I see some of the disadvantage with that as well. As an interactive broker, on a point of security point of view, they are too much strict. They have some login restriction every time you need to enter the password, which is not there in the QuestTrade. So that's a good thing about it. But you should also think about commission. That's the main thing I would suggest while choosing a broker.
Okay, thanks. But how can I move my TFSA to non-TFSA?
So mainly, if that is a TFSA account, you cannot switch from TFSA to non. Basically, if you have the TFSA, then from one broker to another broker, you can choose the same account. So if you want to go with the individual, you need to open up as a separate account. You cannot just migrate from TFSA to individual.
Oh, okay.
Both are separate account.
Oh, okay.
Yeah.
Hey, another quick question. This is Prasad here. So other day I opened my account on Interactive Brokers and I wanted to deposit the money. They gave three options. One is first one was a bank-to-bank transfer, then wire transfer, and third one was pay as utility bills or something, like pay as a bill something. So I chose the first option, considering it must be simple. But it's been, my money got deposited to them with them on 2nd of December. And still it is not available for trading. They say it will be available from 8th of December. So is it normal thing, or it is just because I'm doing it for the first time with Interactive Broker, they are doing this scrutiny? What is your thought about it?
I would say that at the beginning level, when you just join any broker, they have some security steps. They need to, in a background, they need to verify your name and everything about with the CRA and everything. So for the first transfer, they might gonna take longer than the expected time, but it should not be a case for every time. I usually 3 to 4 days. Please consider as a business days, and probably I prefer always a bill payment because that's I found something as a quicker as well as no extra money for that. I think that's also a good option.
Yeah, actually, then on the 3rd of December, I tried with Quested. I opened two accounts in one go, one TFS and one normal. And then they also gave three choices to transfer the funds. This time I chose third option, pay as a bill or something. And immediately next day it was available for trading.
Yeah, I know.
So I think maybe because of this pay as a bill is a quicker option than
no, I would say in that case you should consider that every broker is different. They have a documentation on the background verification as well as setting up the account. So in a Quested it's slightly quicker. I know that. That's right.
Oh, okay. No problem. Thanks.
Yeah. Anyone else who has any question, or we can end the session from here?
I have one question.
Yes, Rajan.
Uh, in interactive brokers, I could see a lot of account types. So is there any particular account types we need to look at? Like I could see margin accounts, I could see
So
fixed
when you
retail.
think about the option, you should go with the individual account. Within the individual account, you can select cash or margin option. I would say go with the margin. There are pros and cons. We can discuss in the in a option plus subscription plan what are the benefits and all that. But mainly, if I see on the top level, there are different account. But if you're going for the option, you should go with the individual account. If you're going for equity, go with the TFSA or RRSP or spouse RRSP, depending upon your need and the room you have with the CRA.
Okay. Okay.
Yeah. Is there anyone who has any question? Okay, Rajiv Shah. Rajiv Shah has a question. Wealthsimple doesn't have option. That's correct. Wealthsimple doesn't have the option. You can only go with the equity trading. But I would say, even if you go with the US stocks, I would not suggest Wealthsimple. It has a 1.5% commission, which is quite high, I believe. So I personally think about only going for the Canadian stock, wherein I use Wealthsimple. For any other thing, I use TrustTrade or Interactive Broker, depending upon my need. Yes, Interactive Broker is my main broker. That's correct. It's a good platform.
Okay, I have one question.
Yeah.
Okay, so like even I see other traders, even the bigger ones, they read lots of books,
Mhm.
you know. So like which book you recommend to learn the basic steps? So we will know we have a good picture of the stock market, like, in front of us. So we know how to deal with it, how to learn it, which things we have to see, so then we can be prepared, like prepare ourselves, and then you just, you know, make us a good trader as well.
You're right. There are tons of books out there, and it's suitable for traders of like every level of experience. If you and there are tons of books out there, so there is not one that I would say like, okay, use this or this that. But what I can do is I can compile a list of top 5 of my favorite and send it to your
Yes.
way. So you can pick whichever you want, and
Yes.
then you can start there. But yeah.
Yes, because I want, like, I want to prepare myself. I have to gather all my supplies before I come to your class. So
Yeah,
like then
definitely.
then I understand everything better. What you are talking about. So
Yeah.
then my every concerns has to be clear, and then my question is like just to the point. I don't want to be a like a baby. I don't want to be like I'm asking a senior person, like the baby
First of all,
questions.
I would say you can ask any questions you want. No question is baby questions, or that's what we are here for, right?
Yes.
And other thing is that what the books that I would suggest is basically to understand the basics of um, stock market
Mhm.
and how things work, not to understand like the strategies or
Yeah.
like the nitty gritty of it, because one of the reason is that because a lot of stuff that's out there will teach you about different things that I personally don't think that beginner needs or require. It
Mhm.
just makes everything very noisy, and
Mhm.
because if I throw a lot of information at you, then you're just gonna get confused. I would rather have you understand the basics and then build on top
Yes.
of that.
Yeah, that's true because I heard it. There's like, the investment fundamentals, like there's a study, you can do it, but the course is too high, the prices
Yeah,
are too high. So you can't afford, like even for me, I'm a student. So I just done my study and right
yeah.
now I have to work.
Mhm.
So my work I can't do like the remotely. I have to go outside the work in
Mhm.
a building or in an office. Like I'm laid off right now.
Mhm.
you know. So like I wanted something so I can, you know, like type of jobs I can do it. So like to make money, to stand on my feet, then I can help my family, help my parents, you know.
Yeah, of course, and that's what like that's what trading is. Like it's kind of like a second job without it being like without it requiring like 8 hours of your day that you need to spend there. You know, and it's a good way to earn money if you're doing things the right way and if you are taking time to learn about it and not just like half-ass it. Like that's why I say, but if like I personally thought that it would like when I first started it, I made a lot of mistakes. Like I blew up $5,000 account in 10 days because I had no clue what I was doing and I had nobody to teach me or
Yes.
guide me through the process of learning how things works. So that's what we want to be doing for you guys, where we can guide you through this whole process of learning this new thing that you are interested in, and that will help you in your future, basically.
Just to add into what Yash said, so we are planning with the LeapMeet, which is going to be on the frequently basis. We are also planning for Q&A, wherein you can ask the question. We are also planning for the Tuber KB, wherein we'll share our own experience as in a knowledge, and you can learn from that particular fundamental things,
Yes.
which will be available for all the Option Plus subscription plan holder, and they can learn by themselves in their own time.
Yeah.
Yeah.
That sounds good. But like my last thing is make it faster, please. I can't wait to like, you know, like start. I want to like as soon as possible.
Yeah,
We are glad to hear that. Yeah.
yeah, we're glad to hear that, and we'll get on it.
Yeah.
Yes. Thank you guys. I
Mhm.
appreciate it. I appreciate your
Thank you.
time.
Of
Thank you.
course.
Yeah.
All right. If anybody doesn't have any more questions, we are going to end this. Thank you for giving us pretty much 2.5 hours of your day on the weekends. We really appreciate your interest and that you decided to spend that time with us today. Hope you learned something and hope it helped going forward with your trading.
Thank you so much, everyone. Thank you for joining us.
Thank
Bye.
you. Bye.
Thank you.